Today I want to talk about how Barclays created $16 billion worth of AMC and GameStop synthetics, and how this actually halted one of the previous squeeze attempts. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Alex tweeted saying Barclays just agreed to a $361 million settlement payment to resolve SEC charges of overissuance of securities sold. It says, according to the paperwork, during a period starting on or around January 28, 2021, they sold $16.37 billion in excess of what was actually registered. It says the SEC today charged Barclays and Barclays Bank in connection with the unregistered offer and sale of an unprecedented amount of securities due to a failure to implement any internal control to track such transactions in real time. The firms agreed to pay $200 million civil penalty and also disgorgements and prejudgment interests of more than $161 million. Now in the lawsuit, it says beginning on or around January 28, 2021, Barclays offered and sold securities in excess of what was registered on the 2019 shelf. These overissuances continued until on or around March 9th of 2022. So that's a full year and one whole month of illegally selling additional securities that Barclays had not registered. Over the 14-month period of overissuance, Barclays offered and sold approximately $16.37 billion of securities in excess of what was registered with the Commission on the 2019 shelf. Now that obviously must be a massive coincidence that this giant error by Barclays wasn't detected, wasn't picked up and wasn't reported until a full year later. And it must also be a massive coincidence that it happened on or around January 28th, just as AMC and GameStop started their run. Barclays was also selling these additional unregistered securities during June of 2021 as well, when AMC ran up again. But as Bigham's pointed out, it's absolutely ridiculous that Barclays sold an additional $17 billion worth of unregistered securities, obviously to short AMC and GameStop, and only had to pay a small fine of $361 million. Because Barclays didn't profit directly from this sale of unregistered securities, aka they didn't make any profits shorting AMC and GameStop themselves, they obviously don't have any profits to pay as a fine. But obviously all of these other hedge funds and market makers out there like Citadel profited massively, but because they didn't commit the crime themselves, it was somebody else doing it, Citadel don't have to pay back their profits. Now, it wouldn't surprise me if other prime brokers or market makers or major institutions were also selling unregistered securities, they just haven't yet reported the error. Obviously, the SEC basically does nothing in terms of actually investigating what these major banks are doing, they just wait for these major banks to report their inefficiencies. Obviously, we're in a self-regulatory or self-regulating organisation where these major banks simply report their failures when they detect them and they then pay a small fine. But obviously, if these failures and these illegal crimes go undetected and unreported, whether it's by accident or on purpose, nothing is ever done about it. Funnily enough, Barclays actually printed an article in CNBC on January 29th, 2021, the day after the sneeze and the day after they started naked shorting $16.37 billion worth of securities. The article says that Barclays says the GameStop short squeeze will not cause a broader market contagion. Now that seems very coincidental that Barclays somehow knew the GameStop squeeze wouldn't impact the broader market, maybe because they just sold $16 billion worth of unregistered securities to try and halt the squeeze. Barclays were obviously in control of the situation the whole time, selling billions and billions of dollars worth of unregistered securities, and this article is simply their way of letting the other hedge funds know not to panic. They're basically saying to the other hedge funds, guys, we know that GameStop is squeezing and we know that you're hurting, but don't worry about it because we're printing billions of dollars worth of unregistered securities. Therefore, we are going to halt the squeeze, we are going to stop the squeeze, and we are going to push the prices back down so that you don't lose billions and end up being liquidated. I think without Barclays selling these $16 billion worth of unregistered securities in GameStop and AMC, both of the squeezes would have undoubtedly happened on January 28th. And they would have likely also happened again on June 2nd. AMC was running up, but again, Barclays must have been selling these additional unregistered securities to halt the squeeze. But now that Barclays have stopped selling these unregistered securities, I don't think they'll be able to hold the price down much longer, especially as Credit Suisse still has open GameStop and AMC shorts. In this Archegos litigation, it says you'll recall they took an $800 million P&L hit in their Credit Suisse portfolio during the GameStop short squeeze week. Credit Suisse said we were fortunate that we happened to be holding more than $900 million in margin excess on that day, so no resulting margin call actually happened. Since then, Credit Suisse has pretty much swept all of their margin excess or lost all of their margin excess, so the prospect of a $700 to $800 million margin call is very real if we see similar price moves. And also why a $500 million severe stress shortfall limit is not only reasonable but also plausible with more extreme moves. So the fact that Credit Suisse is running still about the price of AMC and GameStop running up clearly means they still have open short positions. And especially as Credit Suisse has now swept or lost all of their margin excess, the next time AMC and GameStop run up, it could very well cause the squeeze. It would very likely cause a $700 to $800 million margin call against Credit Suisse, and this time round Barclays won't be selling these additional unregistered securities. Now, we also saw Michael Burry tweeting saying the difference between now and the year 2000 is the passive investing bubble that inflated steadily over the last decade. He said all theatres are overcrowded and the only way anyone can get out is by trampling over each other, and still the door is only so big. An unusual ape tweeted saying, so what you're saying is that AMC shorts are currently very overcrowded and these shorts have to trample over each other to close out of their positions. Now, I think this tweet may have a few different meanings. Michael Burry could have meant that these longs are very over-leveraged or very overcrowded on their long positions and the market is crashing. As these hedge funds are very over-leveraged and very overcrowded on their long positions, they need to sell off their long positions as the market is crashing and they need to trample over each other to exit first. Now, obviously selling off tons of long positions during a market crash is going to cause the market to crash further, and it is going to cause a number of hedge funds to end up being liquidated, those funds that can't sell fast enough. Now, many of these over-leveraged long hedge funds are also still shorting AMC and GameStop. Therefore, when their portfolio is liquidated as their long positions end up being margin called, they'll be forced to sell off their long positions and forced to close out of their shorts. Alternatively, Michael Burry may have not been talking about the over-leveraged longs, but talking about the over-leveraged shorts that still need to rush to close out of their short positions. Because obviously during an AMC squeeze, many of these over-leveraged shorts will need to close out of their short positions or face being liquidated. And it seems like that squeeze in AMC and GameStop could be very, very close. As 741 Trade tweeted, he said the max GameStop borrow rate jumped to 954% in the after hours trading on Friday. He followed up by saying, no typo, that's nearly double the previous all-time high in the GameStop short borrow rate. Clearly there must have been one or two hedge funds out there absolutely desperate to legitimise their GameStop short positions, willing to pay 954% interest to borrow some shares. They're either trying to add to their short positions or legitimise their short positions in a mad rush and a mad dash for the exit door. And it seems we're seeing even more sketchiness with the AMC data, even from the FINRA website itself. Kareem tweeted saying, hey FINRA and the SEC, how can your official page report 1 billion shares outstanding for the AMC ticker? Now, if we go to this page, we can see it is actually the official FINRA page, and this is also the AMC stock and not the Ape stock. While Ape haven't yet issued their new shares, they may have authorised and may have included those additional new shares in the shares outstanding. But obviously it was Ape that authorised the issuance of 425 million additional shares and not AMC. There's no new AMC shares being issued. But yet the FINRA website is reporting that AMC shares outstanding are 1,033 million shares or 1.03 billion shares. Now I'll zoom in to make this a little bit easier to see, but we know that AMC does not have 1 billion shares outstanding. Ape may have 1 billion shares outstanding as these new shares have been authorised but not yet issued, but we know for a fact that AMC does not. But somehow, even though we, the dumb money investors, know that AMC doesn't have 1 billion shares outstanding, somehow even FINRA themselves believes that to be true. Clearly, even FINRA doesn't know how many AMC shares are out there, how many have been authorised, issued, or how many are outstanding, and even FINRA is getting confused with the real data due to the sheer number of synthetics. And finally, you may have seen that Gary Gensler in the SEC has just charged Kim Kardashian for unlawfully touting a crypto security. Now, we knew that Gary Gensler didn't do anything to protect retail investors, but this is really taking it to a new level. Instead of charging Ken Griffin or Doug Sifu, he's charging Kim Kardashian for promoting crypto on her Instagram page. And as Jan Jack tweeted, he said, yep, that's completely fine, just keep skipping Doug Sifu and Ken Griffin for overissuance of securities deemed risky for short sellers or for facilitating overwhelming naked shorting in certain stocks that risks triggering a systemic catastrophe in the financial markets. The Fed has even previously said that meme stocks like GameStop and AMC do pose systemic risks to financial stability. This isn't because retail investors are holding an $8 billion stock like AMC. This is because many institutions, funds, market makers and prime brokers are illegally naked shorting these companies and risk being squeezed and risk being destroyed. Don't forget that AMC is only an $8 billion company. Retail investors holding $8 billion worth of stocks isn't going to collapse a $30 or $50 trillion stock market. However, if many of these major investment banks that make up this $30 or $50 trillion stock market end up collapsing as a result of being squeezed, well, that's their fault and not ours. But guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.